focus on another name then. We have the management of Symphony who joins us on the show. Remember, in the past quarter, the domestic business did very, very well. But there was a bit of an issue in terms of the international business. So to understand how are things shaping up in the first quarter and what's the way ahead, we're joined by Mr. Nrupesh Shah, the Executive Director, Corporate Affairs at Symphony, who joins us on the show. Good morning, Mr. Shah. Thanks so much for joining in. Well, I want to talk about the domestic part of your business. But since exports and the international market was a problem pocket, Australia and USA, could you tell us whether things are improving a little bit out there?
Not really in terms of the external environment, economic environment, and the way in which the large format stores are destocking. However, irrespective of that, we have completely transformed our strategy as far as Australia business is concerned. We are moving from ducted air cooler and ducted heaters to movable heaters and movable air cooler, for which there is a major traction as well as there is a decent margin. So that will happen in the ensuing quarters. This is as far as Australia is concerned. Coming to United States, for summer of 23, as such, they have already ordered well in advance, which is almost 50% of previous year. But we are sure that once there is a reasonable summer, we may be out of the stock, but nothing can be done at that stage. But we believe that as far as US market is concerned, this seems to be a temporary phenomena. However, it remains quite profitable business.
Mr. Shah, good morning. Your consolidated revenues grew 14%. I'm talking about FY23. And standalone revenues grew some almost 40% or so. Could you tell us what are your internal kind of targets, expectations for FY24 on the top line?
As such, we don't give any forward-looking statement, but what we stick to, irrespective of the summer, on a CAGR basis in the medium to long term, we expect to generate 15 to 20% CAGR growth. We are fully cognizant of the fact that last couple of years have not been good and we have a lot of catch up to do.
So how is competition? Are we seeing increasing discounting? And what are your thoughts on price increases from here on? I believe you have already undertaken a price increase in the first half of the year. Is there more in store?
As far as competition is concerned, I think there is nothing new. Say about 10, 12 years before in organized market, our market share was close to 42%. For last 5 to 7 years with the competition, our market share is 50% in the organized market and it remains intact at that level. Secondly, we get an edge because we have a completely focus, whether it in terms of the R&D, new models, and complementary R&D and manufacturing facilities, whether in India or overseas, and that helps us a lot. And hence, we do have year after year many path-breaking models with new technology and features. That's as far as the competition is concerned. Coming to the price increase, of late, the raw material and input cost price has stabilized. We have already taken decent price increase in last 9 to 12 months. So as of now, we are sticking to the current price. But as far as Symphony is concerned, irrespective of anything, we never resort to any kind of discounting schemes or any kind of left and right, season or off season, any special concessions.
Okay. All right. Mr. Shah, domestic EBIT margins, they have improved well. But do you see it headed back towards the 28 to 30% that you've delivered in the past? Domestic EBIT margins is what I'm referring to.
Sure. So not necessary for every quarter, but that's what we are aspiring to be. That's what we are working towards. So whether it is in terms of the cost of doing the business, in terms of the value engineering by way of new models, as well as whatever price increase we have taken, by a combination of all those factors, we aspire to be back to that normal EBITDA margin percentage in domestic business in ensuing quarters.
Mr. Shah, just briefly, if you can, you yourself said that last few years have been a little tough and you have got a lot of catching up to do. I mean, what can you do to come back in a very strong way? Will you have to spend a lot more on advertising? I mean, because it's a market where your products are well received, and it's a growing market because it's getting hotter every year. So what will you have to do? Will you have to spend more to be out there to be able to advertise your products more?
In fact, we saw some headwinds in last 2-3 years, mainly on account of COVID. As you would have seen in 22-23, as far as domestic market is concerned, we have bounced back very strongly, whether it is in terms of the top line or bottom line, despite major pressure on the cost side, which itself is rationalizing. That's number one. Number two, in fact, we are getting the major advantage of the whatever brand building we have done over a period of time. We believe that, on the contrary, the kind of advertisement, sales, promotion in terms of percentage which we have spent in 22-23, 23-24 and onwards, we need to spend less percentage. It's more about new models, path-breaking models, better technology, more and better marketing network. And also, it is about the LSV, that is a large space ventilated air cooling. All that is going to boost. And more importantly, in terms of the CAGR growth of the industry, it is growing at about 10 to 12%. As far as the organized sector is concerned, it is growing even at a faster pace. So that's not an issue at all. We have to continue remain focused.
All right, Mr. Shah, we'll leave it there. Thank you very much for your time. So you're actually saying that all the brand building exercises of the past will come handy, and you'll have to spend more on advertising as a percentage of sales. You'll have to spend less as advertising as a percentage of sales going forward. And 15-20% revenue CAGR is the expectation. That's Symphony for you. Stock's not done well, actually, but the management alluded to that. Even this year, I think from a high of about 12.20, stocks come down to about 8.80 or so. So that's Symphony for you. So